Hello, this is John Kvale, and this is your March 2016 Economic and Capital Market Monthly Review. I've got a lot of information to cover, so we'll get right to it. Wanted to remind you in moto form, it's so good that we need to say it twice for those of you that are Madagascar fans. Those that are not, just pardon my silly humor. We've got a few tax items that we can still help our 2015 taxes. These are our favorites. It's itemize your standard tax deduction. Second would be fund an HSA savings account, fund an IRA if you don't have a 401k or if you meet the limitations, and a simplified employee pension. This is one of our favorites because it can offset any type of consulting income. It does offset the net amount, so work with your CPA or professional or software, and these are great tax saving ideas. One thing I wanted to bring up, we are up to a new record here, 9.5. Last year we peaked at 6 during tax season. We're already up to 9.5 on tax fraud incidents, and I noted this in a post earlier in the month that it appears that our information is being shared, so the folks that have been hit before are being hit again, and people that have had an incident tend to have a second incident. So keep your guards up. All right, let's move on up to this is the economic portion of our monthly review. We had a nice move back here. This is very interesting. We're gonna follow this. This is basically an index that follows the manufacturing of the United States. It's a survey, it's a diffusion index, but what's most important is this move right here. This is a nice positive move. This is from Econoday, and this is with no revisions. There's a lot of revisions in these things, so this may change, but right now this is something we're really following and we like. As you can see, it had fallen under 50, which is the kind of theoretical line for contraction, and now it's back up for growth. This could mean good things. All right, let's move on over to the employment situation. Busy chart, bear with me. I noted here that on Thursday there was an unemployment claims from the Bureau of Labor Statistics that increased unemployment claims. We're watching that, but more importantly, this is the non-farm payrolls of new hires. This is holding steady. It's very volatile. I talk about this. It's very volatile, holding steady. This is a good that's a good thing. We're happy with this. We're not exploding, but we're not falling off of the cliff. So these things do move around. We're keeping an eye on it. Let's jump down here to I mentioned this actually last month, and this graph is also in the newsletter. And the support and resistance. If you may not believe in momentum or the voodoo of capital markets, but other people do, and so it's kind of like the 4-minute mile. So it took a lot of time before somebody finally broke through it, and then once they did, multiple people. So this is our kind of upper echelon here of what we call resistance. This is support down here, or a bottom area. It looked like we bounced really hard twice off of this, and it's going to be interesting to see if we can get back up to new highs or if we can move on through. What really put the juice in this is when Yellen came out and said that we probably only expected 2 more rate increases instead of 4. Market. All right, anybody that doesn't think oil not only matters in your car but matters to the capital markets, Liz Saunders put this out, and I found it very interesting. This is the S&P since January, and this is the price of oil. Is that unbelievable? Look at that correlation. That is just amazing. We forget how important oil is. Yes, as oil goes up, it does affect some things in a negative manner, but it was so low, bottoming out at $26 a barrel. I think a lot of people thought that it meant recession. That's it. I know I covered a lot of ground. We appreciate it as always, and I thank you very, very much for your time. Watch for more next month, and we will also have more information on the newsletter. Thanks so much.